Hi, how are you? Ramesh Fakori here at the IRA Club. So I'm really excited to introduce Chris Rawley.
First of all, thanks for having me on. I've been a self-directed IRA investor for a long, long time. And so I back in 2014, 2015, I've been in real estate a long time and started looking at different types of real estate. And one of those types that kind of crossed my radar was agriculture and farming. I drove around, I've traveled extensively all over the world, seeing, people that were much more dependent on their food farming than we are here, where we have kind of 24/7 access to is unlimited food supply with restaurants and supermarkets and things like that. But I've been in parts of the world where people didn't have that, and people don't take their food for granted. So that sort of gave me an appreciation for agriculture. And so I wanted to see if I could invest in a farm. And it turns out that was a pretty hard thing to do. So looked at a bunch of different ways to do it. Wasn't really happy with any of them. There was things like agricultural REITs and farmland funds, but that was pretty much, those things are pretty much locked in step with the stock market and publicly traded. So they don't offer a lot of the advantages that these private investments do. So we decided to start our own platform, and I'm going to tell you why we're so bullish on agriculture and why we think it's a great investment for you to consider for your IRA Club IRA. A little bit about what's going on in agriculture, and like any industry, it's the customer that drives change in the industry. So in this case, consumer preferences for food are evolving pretty rapidly. You can see that little word cloud up in the top right of the slide there, where this is just some of the latest food trends or current food trends. Some of the ones to point out that we see a lot of demand for is organic. So agriculture since the 1950s in the US has become very industrialized, conventional, uses a lot of chemicals, a lot of those chemicals end up in the water table from runoff. So people are demanding organic because it's healthier food, and it's also better for the environment. You see a lot of things like farm to table, locally grown foods. That's a big deal now for a lot of reasons. Some people just like supporting their local farmers, but we'll get into some other reasons why that might be a good thing. And then there's all just kind of the different types of healthy types of food, clean eating, vegetarian, vegan, non-GMO, et cetera. So what's happening is the consumers are demanding these very fragmented types of agriculture, and farmers are really struggling to keep up with it. So they're having to adapt their growing methods. And you can see a couple pictures here of some various types of indoor farms, greenhouse farms, vertical farms. And these farms are very capital intensive to put together. Indoor agriculture is fairly new here in the United States. It's a little bit more established in Europe and in the Middle East. But one of the reasons we like indoor agriculture is because you're producing food locally. So most people don't, a lot of people do. If you're on the West Coast, you probably know this, but most of the fruits and vegetables we consume in the United States, especially leafy greens, are produced in California, specifically Salinas Valley, California. And that produce is shipped all over the country. So it takes a lot of energy to get it shipped around. There's some risk involved with labor. And we'll talk more about risk here in agriculture in a second. But so what's happening is these farms, these local production operations are springing up all over the country in cities and suburbia, in all different types of climate. Indoor agriculture, also called controlled environment agriculture, allows you to grow food year round in places where it wouldn't grow. And it saves a lot of water. It prevents that runoff that's damaging for the environment. And it's also produces a fresher, in some places more nutritious produce that gets to your table a lot quicker. So at the same time, we've seen, especially in this past year with COVID, that food supply chains, those supermarket shelves are starting to be empty in some occasions, especially at the beginning of the pandemic. We saw that. So you guys know this one. I show this slide to people that aren't really, alternative investors. I'm sure everybody on here is pretty familiar with what's going on with the stock market. I update this slide every time I do it, and I was just, it's been several months since I updated, and I just remarked it. This is essentially, it's called the Buffett indicator. It's a indication of equity, stock market equity versus the gross domestic product. And you can see, not only is it its highest level ever since being measured, it just has completely spiked up in 2021. And I'm sure if you're following inflation, not necessarily the CPI statistics government feeds you, but the inflation you see every day at the gas pump or in the grocery store, you know that the money supply is increasing and dollars are losing their value. So people that are investing in real assets are going to make out in this environment versus somebody that's in cash or somehow tied to the stock market. The other thing about that is food, and we'll tell you why we like agriculture here. This is the reasons we're bullish on agriculture. First of all, demographics. Population of the world right now is 7.5 billion-ish, something like that. Rapidly growing. By 2050, we're probably going to have 10 billion people. So more mouths to feed. Agriculture, like real estate, is the industry that touches every single person on earth. Everybody's got to eat. Second is just outsized returns. You can see that little graph on the right. This is just one small segment of agriculture represented, farmland in the US, but it outpaced stock market, S&P 500, bonds, gold, and of course, inflation. So over the long term, agriculture is proven to be a outsized rewards. Second is diversification. So the investments that we have at Harvest Returns are not correlated with the stock market. You're investing in an individual farmer or a agribusiness. You're not investing necessarily in a pool of companies or anything like that. We do have pretty low minimums that start at $5,000 or $10,000 for our investment. So it allows you to invest across a variety of different types of agriculture companies, different types of crops, which I'll get into. And that diversification, both geographically and product types, helps reduce some of the correlation in your portfolio. And finally, improving the food system. I talked about this. Farmers out there, they're doing these innovative production methods. The ag finance system hasn't caught up with them. It's basically stuck 50 years ago for row crop farmers who are getting their USDA guaranteed loans to grow soybeans and wheat and corn, things like that. We don't necessarily offer those types of investments at conventional agriculture. We're more focused on some of the unique agricultural niches that produce different return profiles, and I'll talk about those. On the Harvest Returns platform, or in general, we like to be the one-stop shop for agriculture. Timber, if you've been to a Home Depot, Lowe's, whatever, you've seen that lumber prices have just shot through the roof here in the past 6 months. However, we have done tree crops, and we recently did a hazelnut farm. We've done cocoa farms. These are tree crops. They produce a higher return than some of your other types of assets, and it's essentially what's called kind of a permanent crop because it continues to grow, and these trees have an investment profile. The thing to know about tree crops is that it's not an instant gratification thing, although you're getting outsized returns. It takes a while to get a crop from the time you plant the tree, whether you're cutting down a tree for timber, it takes a while to mature, a number of years, or whether you're doing like almonds or hazelnuts or something like that, it takes 3 to 4 years to get that first crop, and then the crops continue to kind of grow for there as the tree produces over the next several decades, and that's in that permanent crop space. Going in the middle, livestock. So what we really like at Harvest Returns, grass-fed livestock, humanely raised livestock, and there's a couple reasons for that. So generally when you go to the supermarket, you buy a pound of hamburger meat, it's been grass-fed. Most cows are going to eat grass most of their lives, but then it's been grain finished, meaning they take it to a feedlot, they stuff it full of some sort of feed, soy-based feed, grain-based feed, and fatten it up. With grass-fed, grass-finished livestock, basically the cow or the sheep or whatever the case may be lives his entire life in a field, eating cattle or eating grass and flowers and things like that until the day the cow goes to market. And so at because of that, some people will say that's a healthier, leaner type of meat, which is true. A little bit different taste profile. People like it, but it also brings a premium price in some cases. So we like the commodity. The other thing about it is most of our grass-fed producers they're smaller scale operations, so they use smaller processors, and they haven't been impacted by like the COVID shutdowns and the other big processing plants. So that's been good for our cattle investors. Indoor agriculture, I talked a lot about that. There's two basic pieces up on that screen there. You see a large scale greenhouse. These are producing food at sort of an industrial capacity to distribute through kind of a wholesale distributor into supermarkets and things like that. Then there's row crops. As I mentioned, we generally don't do row crops. This is what most people think of agriculture. It is a good investment, especially lately with commodity prices had been depressed for 5 or 6 years, and now they've kind of shot up this past several months. And so people that are invested in row crops are doing well right now. It's kind of generally a lower yielding investment, but can be very safe. And then something we've been doing lately is ag tech companies. So all this new technology requires innovative companies that are producing growing systems, sustainably ways to fertilize their crops. In this case, that picture is one of our companies that we invested in, and that's a precision livestock thing where there's cameras that look at the cows in the feedlot and help kind of takes the cattle yard or the feedlot foreman's eye and applies machine learning and sensing to it, and it tells you which cows are eating too much, too little, and helps save grain, save cost, and save the environment. So we do like to be the one-stop shop for agriculture. We have some very unique investments that you will not find other places. A lot of venture capitalists put a lot of money into that space, and for smaller investors who might have $10 or $20 or $50,000 to put into a project, up until we came along, there really wasn't a way to invest in that. So we're pretty proud of our work in indoor agriculture. Once you've got your IRA all set up, the first thing you want to do is just go to our website. You can register, your typical kind of registration, name and password. And then if you decide to invest, you're going to obviously need some more information. You'll set up your individual profile first, and then there's a button there that says set up an entity or set up another profile, and you're essentially click on the button that says IRA profile, and you're able to put in your FBO, IRA club, whatever the name of your IRA investment entity is, and put that in there, and it's pretty straightforward. So then essentially you're going to be able to see our offering documents at that point, or our offers. At any given time, we have 1 or 2 projects live, 1 to 3 projects live. You're able to kind of comb through those, look at some of the past ones we've done, but look at the current opening ones. You're obviously, you don't want to invest before you've read the private placement memorandum. We do Regulation D offerings. Obviously, there's risk involved with that, like there is in any investment, and all those risk disclosures are there. And then once you decide to invest, it's pretty straightforward. You just say, hey, I want to invest with my IRA profile. You go on there, you give us the information. You can wire the money over there, or if you're investing, you can use an ACH if you're investing in an individual profile. And then you sign your offering documents electronically. And then what happens after that is that once we take all these investments, they go into escrow. Once we hit the minimum target, we close the offering and we give it to the farmer, and they start producing their returns, hence the name of our company, Harvest Returns. So they're producing returns, doing distributions. It might be quarterly, it might be semi-annual, it might be annual, and we can get in some of the details on what our investments look like and what their profiles are and things like that. There are a wide range of returns and risk. But to be more specific, so we've done some debt offerings, and those are kind of our slow and steady, lower type returning, maybe 7 to 14% in our grass-fed cattle offerings, up to kind of the middle offering might be similar to a commercial real estate project, where especially on the development side, if we're funding a new project where you're going to get higher kind of outsized returns, because there's a little bit more risk there on the developmental side. But north of 15 to 20 to the high 20s. And then on the ag tech companies, that's those are our riskiest sorts of things. These are startups, they're technology companies, they're kind of combining agriculture and technology, and that's where you have the opportunity to take to get a really big return, 10 times return, 50% IRR higher, those sorts of things. One of the very first companies that we invested in is actually an Indian ag tech company. It was one of our very first companies on the platform. They recently did a $30 million funding round with some venture capitalists. So they started out really small with 250,000 on the platform, and now they've grown. They're basically changing face of ag finance in India. So yeah, that's the potential reward on those higher flying ag tech companies, but there's obviously a lot of risk. So you don't want to invest money that you can't afford to lose and only have a small bit of your portfolio and that sort of thing. So again, we want to have something for everybody. We do Reg D offerings. So generally we take most of the ones we do are Reg D 506B, which means that we take accredited investors, but up to 35 sophisticated investors or unaccredited investors. So these are people that have signed up on a platform. Generally, we've had a conversation with them. They've requested the offering documents, read the offering documents, asked questions, and then they're able to invest. And we can take up to 35 of those in each deal.
So how long is the average return? No, how long is the average investment's duration? Like how long?
Yeah, so the shortest we've done is some of our debt, and that's 6 months. The debt is usually a year, 1 to 3 year notes. The equity offerings are generally tend to be 3 to 5 years, sometimes a little bit longer for things like tree crops. We just did a hazelnut one that's a 6-year expected payout.
What do you see as like the future trends? Where do you see harvest returns going, let's say 5 or 10 years from now?
Yeah, I mean, we're going to continue to kind of focus on these niches. We're really bullish on indoor agriculture. We think that that's really changing the face of production, food production in the United States. So you're going to see more and more of these vertical farms popping up all over the country, and we want to be the one that helps invest in them, helps finance in them, and provides that opportunity to get a piece of the action to our investors. So indoor ag, anything technology related, ag is changing, especially the past 5 years. So we've really seen that the pace of innovation pick up in the ag space.
The information contained herein is intended to help the viewer successfully navigate common IRS and Department of Labor requirements to help achieve successful results from their IRA. The information is not intended to replace information from your legal counsel or income tax professional. IRA Club does not offer or sell any investment. All investments have risk.